Welcome to Growth Investing Mastery. This video introduces a new company called FIGR Technology Solutions, with symbol FIGR. As a reminder, this is not investment advice or recommendations to buy stocks. The purpose of this video is to find the most compelling growth stock names. We consistently review new names entering the market, and FIGR is a recent IPO that meets our criteria for a compelling growth stock. The approach at Growth Investing Mastery is effective and comprehensive, which gets results. As of our last portfolio update, we were up 104% year to date and 402% since the start of 2024. Let's take a look at the source material for this video. The company just went public in September 2025, and the official documents and transcripts for this company include the following. There's the S1 IPO prospectus document, and the company had its first earnings call for Q3 of 2025 on November 14th. Additionally, there was a special call detailing the blockchain stock market that they're looking to get approved from the SEC, which was on November 18th. FIGR was also at two recent investor conferences, the Nasdaq Investor Conference and the Goldman Sachs Financial Services Conference. If you're looking to track down this material and transcripts for yourself, they can be found on the Quarter app or through Koifin. The Quarter app is free and Koifin costs about $40 a month. Let's now jump into a company overview of FIGR. The company was founded in 2018 during the crypto craze, and they just went public in September 2025. One of the FIGR founders was also a founder at SoFi, and the other one worked at SoFi. The headquarters is in Reno, Nevada, with 530 employees. Their product is a lending, trading, and investment platform built with blockchain, and their main marketplace is for home equity lines of credit, which are also sometimes called HELOCs. Half of the top 20 retail mortgage shops are onboarded on the platform. The FIGR platform also allows the mortgage shops to white label the product so it looks like their own. In turn, this cuts out the middleman with lower fees, and it improves the transparency of loan details as well. The borrower gets their money faster with a more competitive rate. There's also a Dutch auction on the assets, and this allows the marketplace to determine fair rates. Adding more partners to the platform increases efficiencies. And the company says everybody's a winner in this scenario: the borrower, the mortgage company, and the FIGR platform. The company's automated platform means G&A costs are low. The company's loans are rated AAA by Moody's and S&P, so there's no subprime. The solutions run on the Provenance blockchain, which was also created by the FIGR company. Now let's take a look at some of the incredible numbers this company has been posting. Adjusted revenue in the latest quarter was $156 million, which was up 42% year over year, and GAAP revenue was up 56% year over year. And I was digging in a bit to the difference between the adjusted and the GAAP revenue. And it looks like GAAP just has some weird rules when you work with mortgages and how those get priced. For profitability, the company mentioned adjusted EBITDA is the metric they track the most. Adjusted EBITDA was $86 million in the latest quarter, up 75% year over year. That made the EBITDA margin an impressive 55%. Net income was $90 million, which was up 227% year over year. So it's really great to see that profitability is growing even faster than revenue, which is also growing fast. The consumer loan marketplace had $2.5 billion of volume in the quarter, which was up 70% year over year. And this also includes the component of their platform called FIGR Connect, which had volume of $1.1 billion, and that's up from $0.77 billion in Q2, or the prior quarter. So you can see there's really big step ups in volume on the platform as well. The company recently mentioned they have 250 third party partners. And that number really stands out because that's up from 168 partners they mentioned in their S1, which was authored in August of this year. For a longer term goal, the company is targeting adjusted EBITDA margins above 60%. One nice aspect for investors is that the transaction volume can be tracked. The website that Figure mentioned in their S1 is called rwa.xyz. I typed out the full URL here to get to the provenance specific part of the data. I'll also include that in the video description if you want to check that out on your own. If you take a look at the graph, you can see it has a pretty nice incline up and it looks predictable over the last 3 years. The graph does get a little choppy in certain places, but it mostly gaps up on volume. It also looks like the incline is steeper on the second half of the graph, which is encouraging. It seems like the scale is picking up. And the data on the top left in the picture shows that active loans value is 14.1 billion, while the total loans value is 17.9 billion. So you can see from that most of the loans are actually still active. And we may check in on these graphs from time to time to see how the company's doing. But we don't want to get too obsessed checking these graphs all the time and trying to trade off that. However, we would definitely want to look before earnings to see if the graph looks good. Let's now jump into the narrative about the company FIGR. They're a leading blockchain marketplace for consumer credit origination and liquidity. And they're the largest player in the public blockchain for real-world assets. Their lead is still growing. Every loan on the platform is done end-to-end without human involvement of the data. The company's 250 partners that have been onboarded include banks, credit unions, and mortgage companies. And the Figure platform earns a fee based on the take rate on ecosystem volume. Currently, the ecosystem fee is around 3%. If the loan ends up being securitized through the platform, that adds another 40 basis points to the ecosystem fee. The company's automated and proprietary underwriting system creates a digital audit trail. Management said they onboarded one of the largest mortgage servicers in the United States. They also added that high-grade institutional counterparties want the faster settlement times that are offered by the Figure platform. The company added 7 new buyers to its securitization program, including a sovereign wealth fund. The company's Yields stablecoin is expanding to SWI and the Solana ecosystems. And the symbol for the crypto Yields is YLDS. On the latest earnings call, management said this quarter was exceptional. There's encouraging progress from new product categories, contributing $80 million in volume in the quarter. And management added first lien lending adoption has accelerated sharply with new and existing partners. Let's continue looking at the narrative for Figure Technology. The company's democratized prime product has stood up a number of loan marketplaces. It generates incremental pure margins, management said. It's also a decentralized marketplace and not a balance sheet business. Additionally, the company filed a confidential S1 for an upcoming launch of a blockchain-native equities platform. And the company's partner-branded volume from Figure Connect brings higher adjusted EBITDA margin. On the latest earnings call, one analyst said, "You obviously crushed all of our expectations." And it really stands out to me when an analyst says something like that, such as, "You obviously crushed." Management also discussed on the call about how our existing and future customers are coming to us, so they don't have to market too much. The company's biggest aspect of partner growth in the quarter was in the SMB or the small business segment. There's a strong SMB use case, and that's coupled with product improvement to underwrite small partners. And Figure can bring on partners that can get up and running in just 2 weeks. The company recently added a major market servicer to the platform, and they qualified that they might be the largest. They also added a large independent mortgage bank and ones that have done Robinhood partnerships recently. The company's Yield stablecoin offers fiat on and off ramps and provides an interest yield. And the stablecoin allows for payments using it as collateral and cross border remittances. Management spoke on the Yields coin by saying, "We expect to get a significant acceleration off of that." Continuing on with more of the narrative or story about the company. Management said their Yield stablecoin is an enormous opportunity. One direct quote about the product is they said it's a yielding liquid staking protocol construct. The blockchain technology brings transparency and immutability to the data. Management said they've built an alternative capital market that has deep liquidity ratings. The information on the blockchain is available on a second by second basis. And management said you can download the loan tapes on a day to day basis. They followed that up by saying we're seeing significant growth in first lien, 3x year over year. Now the company is pursuing B2B to C for consumer credit. And the Figure platform is opening up the market for mortgages below 100K to be refinanced or borrowed against. The small business segment is adding more partners, and they expect to see significant growth. Figure opened the platform to SMBs during the government shutdown when the Small Business Administration was not open. And so that government shutdown actually sort of helped Figure in a weird sort of way. Speaking about adoption on the platform, management said, "We've seen broadly non-bank adoption." And one reason the non-banks are so interested in the platform is that the decision takes about 5 minutes, and the loan can be funded in 9 to 10 days when it previously took about 40 days. One surprising quote, they said most of HELOC today is greenfield. So the company is calling home equity lines of credit greenfield. And that's really surprising because it's a sort of old industry, but they're really reinventing it here. Let's get into some details of the tokenized stock market that Figure is presenting. One quote was that issuing equity native to public blockchain is a huge transformational opportunity. They added, it's an opportunity to build an entirely new capital market ecosystem. The real value is from the DeFi construct, and management called it a landmark development. The stock market will have the ability to cross collateralize your stock with other assets like Bitcoin or Figure loans. The company says their new stock market will have 4 key advantages. The first is faster bilateral settlement, and the second is 24/7 trading. The third reason was cross collateralization to other assets. And the fourth unlock was an ability to lend or borrow the stock transparently. Let's discuss some more details of the blockchain stock market that Figure is proposing. The way the stock market will work is non-dilutive, and Figure will be putting some of their own shares on the blockchain to start. This new stock market will be fully registered with the SEC, and it has the same disclosure standards as Nasdaq. It also has the same voting rights and economic terms as Nasdaq, including dividend participation. Figure will collect volume fees on both the infrastructure and on the financing. Management said they're creating an entirely new equity capital market. And they added, we're really disrupting the entire vertical stack. It's massively disruptive, they said. Later, management detailed how there's strong interest from market participants, including asset managers and broker dealers. One key innovation for the company here is a mechanism to swap the blockchain security to Nasdaq, and they can do that swap vice versa. Management detailed on day one, it brings whatever liquidity exists in the Nasdaq into the blockchain side. They added liquidity will be enhanced because of the ability to move across both platforms. And they'll be starting off with market makers on the platform to support minimal price discrepancy. The transfer of shares to the Nasdaq will work on the blockchain by having shares burned to ensure non-dilution. The company already has their broker-dealer license. They're registered as a transfer agent, and they have the SEC registered alternative trading system, which I believe is a backup system just in case the blockchain crashes. Now let's take a look at their S1 IPO story details. The company mentioned in their forward to investors, there are 7 parties that sit between the buy and the sale of an equity, and there's 5 parties between debit card transactions. They mentioned a problem they saw in the industry, which is that there's massive companies that have been built around this rent seeking. Loan performance on the blockchain brings liquidity that's never been seen before. They describe their product as a completely new capital ecosystem. No one has been able to catch up to us. The platform is on the Provenance blockchain, which uses proof of stake, and the company holds 20% of the utility token, which has a symbol hash. The company's yield stablecoin is the first interest-bearing stablecoin to be approved by the SEC in February of 2025. Both S&P and Moody's gave AAA ratings this summer to the home equity lines of credit the FIGR was originating. The FIGR platform has 75% of real-world asset tokenization share. And so that's really crazy to see that FIGR has a near monopoly in their field. Their scale is simply much bigger than any competitors right now. Lender platform participants include Goldman Sachs, Jefferies, and Barclays. FIGR's average production cost of a loan is $730 versus a traditional bank that has a price average of $11,230. In the company's IPO prospectus, real-world assets locked on August 1st, 2025 was $11 billion. But now when I looked that number up on December 8th, it's actually at $14 billion, so this is growing really fast for how much real-world assets are currently locked. The company's originated loans have loss rates of less than 1%, and that shows their AI models are working. The FIGR exchange has over 1 billion of volume, and that's without doing any meaningful marketing, the company said. The ultimate goal and vision for the company is to become the exchange for everything. Let's now take a look at some concerns and potential bear cases for the company FIGR. The management team mentioned there's typical seasonality in home equity loan origination volumes for Q4 and for Q1. If we look at analyst estimates, they're projecting that the company gets $139 million of revenue next quarter, which would be down sequentially. So it seems like that's the seasonality they're probably talking about. However, we're hoping this company has overcome its seasonality, in addition to having a lot of new products, which might not be in the analyst models. Another potential bear case is that home equity lines of credit were one of the worst performers in 2008. But those were mostly subprime loans, and these are AAA rated loans. The CEO said he saw a great market related to the home equity lines of credit. There's currently lots of equity in homes with lower locked rates. It's a possibility the stock could see some volatility if there's a housing crash. There's also the risk of the Provenance blockchain failing or the token getting classified as a security. They mentioned that token getting classified as a security was a risk in the S1. Another potential issue we found was some workplace drama dating back to SoFi in 2018. One of the founders left SoFi under a misconduct investigation. And I went down that rabbit hole a little bit to see what it was about, but it didn't seem to be worth investigating much further. There was also one strange part of the S1 where they said the company was founded together with his wife. It could be a potential issue, but again, it's probably not worth tracking down too much. A couple key takeaways for us is the housing market is generally slower moving and more stable than crypto or stocks. But the housing market could still have an impact on this company because most of their loan originations are still with home equity lines of credit. And the workplace issues are light yellow flags for me. They're not great to see, but they're not a blocker from us investing. Let's take a look at the valuation for the stock figure. The company has a market cap of 9 billion and with quarterly revenue of 156 million. This makes the run rate PS 14.4. The company's 90 million of net income in the quarter seems to include one-time benefits. And I say that because adjusted EBITDA was lower than net income, which isn't that typical. Next quarter is projected by analysts to be lower profitability. So I'm still not sure if the 90 million of net income or the net income margin of 57% is sustainable. My next step may be to look at that income statement and figure out why the net income was higher than EBITDA. Some factors to keep in mind when determining valuation are that the story sounds incredibly promising to us for this company. Much of the analyst estimates probably do not factor in new products launching. And the way this company is launching marketplaces, they can gather market share very fast. Figure is already delivering a surprising level of profitability for a company of their size, especially if we were to compare them to SaaS companies. But we'll want to keep an eye on the profitability metrics and see where they trend in future quarters. We just don't have that much data on the company yet. Overall, the price to sales ratio, combined with the narrative, looks pretty reasonable for a company delivering this level of results. Let's now summarize our findings on the stock figure. Figure's platform is one of the most impressive blockchain applications that's been built to date. The numbers for this company have everything we want in a growth stock. Revenue is growing over 40%, with profitability metrics growing even faster. The company's first earnings report well surpassed analysts' expectations. Currently, the company gets most of its revenue through home equity lines of credit, and the management team is telling investors that the home equity lines of credit are still a greenfield opportunity. There's massive opportunities for this company to expand with small business loans and consumer loans. Figure is in the process of building a new stock market that brings added liquidity. Overall, we believe Figure has the potential to 3 to 4x in price in the near term of the next 1 to 2 years from now. And that's really the criteria we're looking for. We want to find a company that can grow very fast over the near term. And the Figure platform has a growing flywheel effect that brings in even greater volume. This concludes the video on Figure Technology, and I'd be really interested for your feedback. So let me know in the comments section if you think this is an interesting company or a company you want to invest in. Also, feel free to let me know if you think there's any legitimate bear cases against this company or some problems they may run into. As a final reminder, this is not investment advice or recommendations to buy stocks. Thank you for listening.